Welcome to the Deep Dive, where we deliver the high-signal, low-noise analysis you need to navigate, well, some of the fastest-moving sectors in crypto. Today, we're on a pretty complex mission. We're doing an in-depth exploration of the Internet Computer, or ICP.
And ICP isn't just another blockchain. I mean, this is a project with a goal that is, frankly, almost impossibly ambitious.
Right. They're not just trying to be a better Ethereum.
Not at all. They aim to be a real decentralized internet. We're talking about hosting full applications, front ends, and all directly on the network. No AWS, no Google Cloud.
Which is a fundamental difference, really.
It's the fundamental difference. It sets them apart from almost everyone else in the Web3 space.
And while that vision is immense, the market has been just as dramatic. You, the learner, have seen it. ICP has been on an absolute roller coaster lately.
Oh, absolutely. A massive surge. It basically doubled in value in late 2025.
Only to be followed by this sharp structured retreat. It fell, 25% after hitting almost $9.85.
And that volatility puzzle is exactly why we're here. We really need to cut through all the noise from those massive swings.
So that's our mission for this deep dive.
Exactly. Is this aggressive price movement actually justified by real tech advancements, by real adoption? Or is it just, speculative fervor jumping on the latest hype cycle?
Innovation versus speculation.
That's the core question we need to answer.
Okay, so let's start with the foundation. For anyone tracking the space, what is the core engineering decision that even lets ICP attempt this decentralized internet thing?
It really all comes down to what they call a radical new design of blockchain. It's not optimized for just finance like most chains.
It's built for computation.
Right. It's designed from the ground up to overcome those classic on-chain limitations. Speed, storage costs, and just raw capacity. They use proprietary cryptography, this thing called chain key technology, to make it all work.
And the basic building block of that whole system is the canister.
Exactly. The canister is the heart of it all. It's not just a smart contract. Think of it as a general-purpose, tamper-proof computer program. It holds its own code in its own state.
And, crucially, it can serve web pages directly to a user.
That's the key differentiator. It can serve JavaScript, HTML, CSS, everything straight to your browser. The application is decentralized end-to-end. You completely remove the need for centralized web servers.
Which brings us to their financial model, the reverse gas model. Can you explain how that completely changes the user experience?
It's an inverted model, and it's designed to feel more like Web 2. On Ethereum or Solana, you, the end user, you pay the gas fee for every single transaction.
Which creates a ton of friction. You have to have the token, a wallet.
Right. You have to worry about volatile fees.
Yeah.
ICP flips that completely. It uses a reverse gas model where the developer prepays for the computation and storage.
And they pay using something called cycles.
Exactly. The developer funds the infrastructure by getting these cycles, which are generated by burning the native ICP token.
So if I'm using a decentralized Twitter built on ICP, I don't need to hold ICP tokens or pay a fee just to send a tweet.
Precisely. For you, the user, the experience feels seamless. It feels free, just like using a traditional app.
Which would obviously lower the barrier to entry for mass adoption.
Drastically. It's essential if they ever want to get there.
Okay, so if the goal is mass adoption, performance has to be top tier. Our sources have some hard data comparisons with Solana, which, is often seen as the speed king.
And the numbers are pretty stunning. The recent network data suggests ICP's architecture gives it a really significant edge.
So let's talk real-time transactions per second.
Okay, so in real-time TPS, ICP clocks in at 1.39 times higher than Solana. That's 1,081 transactions per second versus Solana's 776.
And then when analysts look at the maximum theoretical throughput, the difference just becomes enormous.
The gap is staggering. I mean, ICP's max theoretical TPS is around 209,000. Solana's is 65,000.
So that's over 3 times higher.
3.23 times higher, yes. But maybe the most compelling number, at least for developers, is the cost. The average transaction fee on ICP is 98% less than Solana's.
98%.
We're talking fractions of a cent. It's $0.0017 versus $0.008 on Solana. That kind of cost efficiency completely changes the economics of running a big decentralized service.
And then there's finality. Solana is around, 12.8 seconds?
Yeah, around there.
ICP is listed at 0 seconds. How does that even work? What does that mean in practice?
0 seconds means the authentication is basically immediate. It's guaranteed by their chain key cryptography. For a user, it means when you click send, that transaction is finalized and irreversible right away.
So no waiting for confirmations.
None. If you're building high-frequency apps or maybe machine-to-machine payment systems, that 100% shorter finality time is a huge technical advantage.
Okay, hold on. If ICP has 3 times the speed, is 100 times cheaper, and has 0-second finality compared to a giant like Solana, why is Solana's market cap still so much higher?
Here's the bottleneck. What's preventing that technical superiority from just dominating the market?
And that is the critical question, isn't it? It's the perfect bridge to our next sections. Technical capability gives you potential, but market valuation reflects adoption, narrative, and ecosystem maturity.
Right.
ICP has the raw power, but it still has to overcome a pretty significant historical trust deficit and, grow a sticky, active user base. We'll get into that.
Understood. But that speed does let them chase this vision of being a universal compute layer, which brings us to chain fusion.
Chain fusion is the really sophisticated take on interoperability. So instead of using these vulnerable bridges, ICP smart contracts can trustlessly read and write to the native protocols of other big chains.
Like Bitcoin and Ethereum.
They already interact directly with Bitcoin and Ethereum. And by September 2025, Solana integration was almost done. The whole idea is for ICP to be this fast, secure execution layer for the whole crypto ecosystem. Okay, so that's a strong technology package. It sets the stage. But like we said, tech alone doesn't sustain a bull run. We need to shift gears and decode the intense market action we've seen.
For sure. So looking at the technical analysis, after that surge to almost $10 and the correction down to $5.26, analysts are saying ICP is consolidating in a critical accumulation area.
And they're citing that area between 450 and 550.
That's the zone.
Now, analysts seem to be interpreting that recent drop differently. They're calling it structured profit-taking, not a crash. What makes it say that?
The key signal is trading volume. During that sharp decline, the trading volume actually went down significantly.
Oh.
High volume on a drop usually means panic. It means major liquidations.
Yeah.
But decreasing volume, that suggests the selling was planned. It was methodical.
A calm before the movement, as one source put it.
Exactly. It points to consolidation by professional traders, not widespread retail panic.
All right, let's dive into the area that, as you said, never lies, on-chain data. What are the big holders doing?
We are seeing a major confidence signal from the whales. Before the recent surge, and even continuing through the dip, the big wallets have been steadily pulling ICP off of exchanges.
Moving it to cold storage.
The cold wallets, yes, which is a classic sign of long-term conviction. It reduces the available supply on exchanges and signals high confidence in where the price is headed medium term.
And it's not just wallet watching. The sources show that actual network usage is climbing right alongside this.
That's vital. Daily active addresses went up 35% over the last month in November 2025. Transaction activity hit its highest level in a year and a half.
Now, we do need to know if those are utility or speculative transactions.
Of course, but that uptick itself suggests real computation and decentralized functions are expanding on the network.
But the speculative side is, it's just impossible to ignore. How leveraged is this market right now?
Extremely. Futures open interest recently shot up to $188 million. That's the highest it's been in a year. That's a massive influx of leveraged bets trying to play these swings. At the same time, DEX volume hit over 843 million.
Which is way up from the week before.
Exactly. So when you see high futures interest and that much liquidity moving around, it tells you the market is a battleground for short-term traders right now.
So for the learner focused on the technicals, what are the key price points? What confirms the market is regaining a real sustained upward trend.
The analysts are pretty much unanimous on this. A sustained close above the $6.50 to $7 range is what they're looking for.
Institutions call that the trend key.
That's the one. And specifically, there's very strong resistance right at $6.71.
And if it breaks through that K, what are the next targets?
Okay, so the positive scenario requires it to stay stable above that 5 to 530 floor. If that holds, the next targets are projected at 830 and then a potential retest of that recent high at 980.
And the downside.
The negative scenario is a strong daily close below 450. It's seen as unlikely right now, but that would signal a total breakdown of this consolidation structure.
Okay, so we've laid out the incredible tech potential, the signs of whale confidence, but now we have to bring in the critical counterpoint, the tension between that vision and the skepticism that still surrounds ICP.
And this takes us right back to its history, specifically the May 2021 crash. ICP had a catastrophic 99% drop from its all-time high.
Right. And that was fueled by all the controversy around alleged insider token dumping right after the launch.
And that event created a huge trust deficit that honestly still impacts sentiment today. Any big price swing now is viewed through the lens of that skepticism.
That baggage is real. And the Q3 2025 data seems to reveal the core contradiction here, this adoption gap. The infrastructure numbers look fantastic, but the user base seems soft.
This is the central divergence we talked about. We saw great infrastructure growth. Total value locked grew 22.5% to over $1 billion. 2,000 new developers joined. All good news. But at the same time, official DApp engagement fell by 22.4%.
Ouch. So the growth in TVL isn't coming from new everyday users actually using the dApps.
It sounds a lot more like liquidity just chasing short-term yields.
Which is a very different thing.
A completely different thing. A 261% spike in speculative volumes suggests the network is succeeding as a place for liquidity arbitrage, not organic user adoption. And unless that DApp usage starts to climb, the decentralized internet vision is, still just a vision.
And even though the network is super fast, developers themselves point out some structural limits. You mentioned subnet structures before. How do they restrict scaling?
So ICP uses these independent subnet blockchains to scale out. It's fast, but moving data or state between those subnets can add complexity and latency for developers.
So it's not seamless.
It's a trade-off. You have things like strict instruction caps, canister memory limits.
Yeah.
It's stuff developers have to constantly work around. You get very high speed inside a subnet, but there's friction when you try to scale across the whole network.
And then there's the whole argument about tokenomics and the alleged sell pressure from the Dfinity Foundation itself.
Right. Critics point to data from community researchers that suggest the Dfinity Foundation is selling around 1.5 million ICP a month.
And that's on top of staking rewards.
So when you factor all that in, the estimated total monthly sell pressure is somewhere around 2.87 million ICP. Critics argue that's a persistent headwind that actively slows down any price recovery. It undermines confidence.
That's a very compelling case for skepticism. However, this whole narrative could be changing right now because of the tech leaps ICP is making, specifically in AI and storage.
This is where it gets really interesting.
Let's look at the future roadmap.
The biggest breakthrough was the September 2025 ignition milestone. This was a huge deal. It enabled large language models, LLMs, to run natively inside ICP canisters.
So the AI models are running fully on-chain.
Fully on-chain. It made ICP the very first blockchain where complex AI models can execute without any off-chain servers.
Why is running an LLM on a canister such a game changer?
Because it creates completely tamper-proof, auditable, and immutable AI. You know the inputs, you know the outputs, and you know they were processed transparently by the network, not some corporate black box server.
Which is critical for high-value applications.
Absolutely, especially for things like machine-to-machine financial transactions. And this wasn't just a theory.
No, it got institutional validation almost immediately.
Right. We saw Google's new Autonomous Payment Protocol pilot, AP2, integrate ICP right alongside Ethereum as one of its core settlement options.
That's a massive signal.
It's huge. It shows a major player like Google trusts ICP's capabilities for complex, machine-driven finance. It's a direct validation of their whole tech stack.
And beyond AI, the other huge pain point for dApps has always been storage costs.
Yes, running big apps on-chain is just prohibitively expensive on most protocols. ICP's trying to blow up that model. They doubled subnet storage to 2 terabytes, but the real revolution is this upcoming blob storage service.
And the target price for that blob storage is what's making headlines.
The cost target is about 2.5 cents per gigabyte per year.
Okay, put that in context for us.
Centralized cloud giants, like AWS S3, that costs about 27 cents per gigabyte per year. Even a decentralized competitor like storage is at 5 cents.
So this isn't a small discount.
It's an economic model change. It makes deploying media-rich, large-scale dApps on ICP truly feasible for the first time.
Okay, we have covered the whole spectrum now. On one hand, you have this world-class, cost-effective infrastructure making these bold moves in AI and storage.
Right.
But on the other hand, you're dealing with that persistent trust deficit, tokenomics pressure, and, low organic dApp adoption. That's the central tension here.
It truly is. The platform is an exceptional technological foundation for a developer who wants speed and low cost. But the price action is still heavily driven by technical triggers, by signals like the Google News, by whale accumulation, not by broad grassroots utility.
So the market is betting on the future.
It's betting on the future realization of the technology, not necessarily its current use.
Okay, before we wrap up, we have to talk about maybe the most counterintuitive piece of data in our sources. this algorithmic trading paradox on ICP.
Yes, this perfectly captures how tricky this asset is to time.
So if we look at backtesting results for algorithmic trading strategies on ICP from that super volatile period of May 2021 to October 2023, the raw results showed a negative return on investment.
And sometimes severely negative.
Yeah.
One strategy posted an 83% loss.
So losing money is bad. But here's the paradox. Those same strategies outperformed a simple buy and hold approach, sometimes generating excess returns of over 2,500%. How do you generate massive excess returns while still losing money?
This is so critical for the learner to grasp. You have to remember the asset itself had a 99% crash in that period.
So buy and hold was a near total loss.
A near total loss. The algorithmic strategies, while losing money in absolute dollars, were highly directional. They were successful in mitigating that disastrous downside move. They lost a lot less than 99%.
So their success was just being much better at not losing money during the catastrophe.
Precisely. It highlights that the ICP market, historically, has not rewarded the passive buy and hold investor. It demands active management, high-risk tolerance, and really strategic timing to avoid those deep, deep valleys.
The market seems to be defined by these huge, sudden directional moves
that you have to either hedge or just avoid completely to come out ahead, even in a relative sense.
So for you, the learner, here is the final provocative thought to chew on. Given that the technology is now delivering these very specific fundamental upgrades, the on-chain AI breakthrough, the massive cut in storage costs with blob storage, will these changes finally be enough to shift the market?
To shift it from this pure short-term volatility speculation to a truly utility-driven long-term thesis.
And if that shift happens, will that be the moment that consistently profitable algorithmic trading strategies finally become viable on the platform? Something to mull over as we all watch those price triggers right around $6.71.